On today's Belk on Business podcast, we're going to address what generally receive questions in regards to bookkeeping and record keeping requirements quite often. And so hopefully this will maybe answer a question that you may have, and hopefully you'll find this helpful. We have had through the years a number of times people come to us and ask us, number one, am I required to keep a set of books? And I will look at them, and I many times would just simply state that it depends. If you have a real business that's actually monetizing, you're making money, yes, you need a set of books. Now, there are no exact requirements as far as how you need to keep your books. Now, if you're a Fortune 500 company, for example, or running a large company that needs to have an audit or a financial review every year, you're going to want to keep your books in accordance to generally accepted accounting principles. But that's not a vast majority of businesses, and definitely, probably for most of my audience, if not all of my audience, that's not going to apply. But there is a requirement, if you are going to be preparing tax returns, that you do keep a set of books that's actually functional. So there is no requirement as to how you do keep your books, but you are required to keep books. Now, when I went through college nearly a quarter of a century ago now, when we went through, we learned how to keep books on ledger sheets. And I think I may have been the last group to ever go through school that learned how to actually keep a ledger sheet. And I actually still have clients to this day that bring in literally paper ledger sheets. So they buy the big, huge pads, and they with pencil keep the books on with pencil and ledger sheets. And that is perfectly fine. Not generally the most efficient way to keep a books, but it is a way of keeping books. You have your debits and your credits, you know who you paid, you know the account that it belongs to, the appropriate expense account, the appropriate bank account, whatever the account that's involved in the transaction, it's on the books, and you're able to take it and then develop from there a profit and loss, a balance sheet, and be able to prepare a tax return. So there is no requirement as to how you keep your books, but you are required to keep books. Now, of course, nowadays, most people have moved to an electronic platform to keep their books. Now, that does not mean because you're using a QuickBooks or a software like that you actually have a good set of books. It's amazing the number of times that we'll onboard a client and they'll say, yes, I have a bookkeeper, and it may be somebody local that has that maybe does books for people, or maybe they hire a VA to do their books, and we get their books, and it's like, you know what, you might as well have not even bothered with going this route. You basically have someone that really just kind of going through and just clicking, enter transaction, and just kind of just using the software to guess where your transactions belong. And that's not going to be at all helpful. I want to mention that a statistic I read this last week, that the average small business is going to spend $12,000 on bookkeeping and payroll compliance every year. Now, some people try to cut corners. They try to cut corners in bookkeeping cost, and guess what? You're going to probably pay that $12,000 either on hiring someone that knows what they're doing to actually keep a set of books for you, or you're going to pay more in taxes, or you're going to lack efficiency, or even maybe the worst part of all that is you really don't know how well your business is actually doing, because you have nothing to look at that you can truly rely upon that can tell you, how is my business performing? So whether or not you're keeping a ledger sheet, whether you're using some sort of software, make sure that it's that everything's being entered in properly, that you're frequently reviewing the books, that you're actually looking at your financial statements, that if you need some outside help, that they're being explained to you, and so you know exactly what's going on in your business, and you also can meet the requirements that the IRS has as to keeping a set of books. Now, if you don't keep a set of books, there is a 20% accuracy penalty that the IRS can charge you. So if they come in and you have not kept a set of books, and they basically are going to have to work through receipts and everything else, and they have to do all this work, they're going to look at you and they're going to charge you a 20% accuracy penalty. And of course, you don't want that to happen to you either. It's bad enough to have to go through that experience, and then on the back end to get hit with an additional penalty because you did not go through the process of keeping a set of books. So there is no requirement as to how you keep them. Just there is a requirement there that you keep them. Next, questions we get asked quite often is, how long do I need to keep my records? Now, when it relates to tax returns themselves, and regardless if this is a state tax return, a federal tax return, a local property tax return, whatever it is, we strongly suggest that you keep a copy of that return plus your proof of mailing or proof of filing. Now, for most federal returns and most state returns now, if you are using a tax professional, they're going to electronically file your return for you. If you're doing your personal returns yourself on TurboTax or something like that, then you would be electronically filing the returns. But whatever method you use, make sure that you not only keep a copy of the return itself, but also proof of mailing. So if you mailed in the return, you mailed in the extension, whatever the case may be, make sure you keep the proof of mailing. So don't just mail it. Send it in to where you're actually going to have you can actually get a delivery confirmation, and then keep that on file along with the tax return. And my suggestion is you keep it indefinitely. It is quite frequently, and not more at the state level than at the federal level, they'll come back and state that they did not receive a return. And they'll end up literally dissolving an entity because their tax return wasn't filed. But if we can go back and show that the return indeed was filed, whether it's electronically filed or paper filed, then we're able to go back to them and be able to address the matter accordingly. So make sure that you're keeping a copy of the return plus proof of mailing or proof of filing, and keep that indefinitely. Now, the supporting documents themselves, so the receipts, the paperwork, everything that goes beyond that, you'll want to keep that paperwork for 3 years from the filing date. Okay, so whenever you actually file that return. So we just finished up here in the recent months, the 2019 tax returns. So if you filed your return and you paid the return by the 2019 filing deadline, which would have been this year, the middle of July, or if you filed an extension, it would have been in October. So you would keep the return from 3 years from, so if you're on an extension, 3 years from the October date, or 2 years from the time that you paid it. So if you're on an installment agreement, for example, you're gonna have to keep those records from 3 years or 2 years past the last payment that you make if you're on an installment agreement. So either 3 years from the time that the return was filed, or 2 years from the time that you actually made the final payment on that tax return, whichever is later. Employment tax returns. So we're talking about your federal 941s, your federal 940s, your state quarterly returns, your state unemployment filings. You'll want to keep those, once again, just like your federal and state tax returns. You'll want to keep those returns along with proof of filing indefinitely. And then lastly, the supporting documentation for payroll tax return computations. So if you're keeping timesheets, you're keeping employee benefit sheets, whatever it is that's going along with however you're calculating your employees' pay. Okay, you'll want to keep that documentation for 4 years from the filing of the return. So it's 3 years for supporting documentation for your tax returns, but 4 years for the supporting documentation as it relates to payroll tax returns. So just a little bit of information here. Am I required to keep books? And then how long should I keep my paperwork? Hopefully this was of some help to you. And if it did bring you value, if you haven't subscribed already, I strongly encourage you to subscribe to the Belk on Business podcast. Thank you much. Have a wonderful day.